Hey there, welcome aboard. It's Walter here, and what I want to share with you today is the idea of trading for aggressive targets and sort of the yin and yang of that and what you need to look out for and ways that you can approach this. It might be a little bit different to what you've heard about before when it comes to your trading. So let's get into it. First thing I want to share with you is this strategy right here. All right. Okay. Cool. So let me share with you what this looks like. Boy, this is crazy, crazy, crazy. I want to just share the screen, actually. You don't need to see me. All right. Okay, what you're looking at here is a system. Now, essentially what's happening here is I'm looking at a $1,000 an account, and there's a special reason for that. In the upcoming small account big profits course, it's actually on right now, but we haven't started trading live just yet. Got about another week before we go live. This is a 5-week course where we talk about how you can take a small account and build it up quickly. You can click the link below this video if you're interested in that. Now, let's talk about what this is. This is a $1,000 account, 2% risk, 3-to-1 reward risk ratio, 35% win rate, no break-even trades, and we're looking at a random sequence of wins and losses. Now, what I want you to pay attention to, though, is this right here. This area right here is telling us this $1,000 account went as low as $958. And then at the end of it, it was at $843,000. So, well, actually, at the end of it was $839,000. So it was in a little bit of a drawdown, but the max peak it hit was actually $843. So this made money, and it took a long time. This is over 1,000 trades. What you're looking at here on this chart, this is the first 300 trades. So you can see here, it had a little bit of a drawdown. It peaked out at about, what is that, 1,400, came back down, had another drawdown, and finally pulled out of that and started looking good. What happens if I change this and I risk triple, 6%? Obviously, I'm going to make a whole boatload more money. You can't, I mean, this is all hypothetical, and you can't really trade. In the retail Forex world, you're not going to be trading for billions and billions anyway. But the reality is, even if I just traded this through 300 trades, I would have made a lot more money. And here's why. Because I was willing to sit through more drawdown. Remember what we said before. It was only at 950. What was it? It was 958. So in this case, I'm going to have to sit through like a 31% drawdown and see it get as deep as this drawdown right here in order to get to where I want to go. Remember, this is the same system, the exact same sequence of winners and losers, but because I'm getting so aggressive with my risk management, I'm able to accelerate it faster. Now, let me just be really clear here. I don't necessarily, just adding more risk to your trade, not necessarily the best. I don't believe that. Not for a minute. While you just we seeing the drop where we might go if we keep pushing through that, but because we're unable to keep pushing through the losing streaks, the bad times, we never get to the equity peaks, and that's the reality of trading. I'm more resilient psychologically as a trader. And number two is you can keep in mind that, or in other words, anticipate what's going to happen. And what is going to happen if I risk 6% of my account on these trades is I'm going to get some very deep drawdowns here. Remember, this is a 35% win rate, so it's a very low win rate. So the risk of running a really bad drawdown is it's pretty good actually. There's a really good risk that I'm going to run through a bad sequence of trades. But here's what I think is even better than just simply going, oh, I'm just going to risk 6% instead of 3%. I think you're better off actually doing something slightly different. So I'm going to put in all the stats here that we had before. 3-to-1 reward risk ratio. We said it was 35% win rate, right? Yep. No break-even trades. And what we're going to do here is we're going to take the winning trades and we're going to add that to the next trade, okay? And so now what I want you to pay attention to is what happens here. Because this is where the magic is, I believe, in trading. If you really want to reach your trading goals, which, by the way, we're going to talk about trading goals and how they apply and how risk management applies to reaching your goals in the Small Account Big Profits course. But this is really the key here. The key is if I take a winning, so here's what's going on this spreadsheet. Every time I have a winner, I am taking those winnings and I'm adding it to the risk on the next trade. So I'm risking, for example, right here on trade 6 or whatever this is, this is trade 7, I think. On trade 7, I won $72.14. I risked that $72 plus an additional 2% of my account for a total of $97.63. And now if I win, guess what I won? I just won $292. And look at the minimum drawdown, the minimum balance. It's $1,000. It's where I started. And now look at the ending balance. I know, again, this is just one possible sequence of trades. It might have been totally different. There's no guarantees that we're not going to have a drawdown. I'm just here to tell you that when you do this, when you take something, when you take your winnings and you add it to your next trade, what obviously happens is you get this compounding effect. Now, it's not perfect because sometimes what will happen is you'll have a win and then you'll follow that up with a loss. So here's an example right here on trade, I don't know, whatever this is, trade 23. So in this case, we won $177. So we took $177 plus 2% of the account to risk a grand total of $239.88, and that was a loss. So we lost $239.88. So that's what you have to be willing to give up if you do this. This type of compounding at the trade level is very aggressive. It's not for everyone, but to me, it's a great compromise between trading for really big results by ramping up your risk and getting too aggressive, and it's a compromise between that and actually trying to achieve your trading goals aggressively. And we're going to talk all about this. I'll show you Monte Carlo spreadsheets, how to anticipate what's likely, what's not likely to happen in the Small Account Big Profits course. If you want to get in on that, it's still open. You can click below this video or above this video, and the page will tell you all about it, okay? So that's all I have for you. I wish you happy trading, and I'll see you in another video. Take care. Bye.